This podcast is brought to you by Carvana. Got a car to sell but no time to waste? Hop on to Carvana.com to get a real offer for your car in seconds. All you have to do is enter your license plate, answer a few quick questions, and if you accept the offer, Carvana will pay you as soon as you hand the keys over. They even offer same-day pickup in many cities. Save your time, score some cash, and sell your car the convenient way to Carvana. Pickup times vary. Fees may apply.
The views expressed on this podcast are those of the participants, not of Reuters News.
That's the thing, you know, there is enough activity to be confident things are moving in the right direction, but Japan isn't a country with a lot of time. I mean, the economy is barely growing, population is shrinking, and they've had decades of deflation, so they don't have time to waste. And so the problem is that today the guidelines are strong enough to force companies to change. Couche-Tard has forced Seven & I to change itself, but still weak enough to allow management to act in their self-interest rather than shareholders' interest. And that's the thing that needs to change. And it's these large, iconic deals that set the tone for everything else.
In recent years, Japan has been signaling to the world that it's open for business. And more importantly, inbound M&A. Well, now there are two deals that we can look at to test that theory. So there's one, Toyota Group's attempted buyout of its key supplier, and Canada's Alimentation Couche-Tard and its failed $46 billion takeover of Seven & I. Now, why are these deals failing? Why are they so complicated? And what do they mean for Japan's economy? Let's find out in this week's Viewsroom. It's Amy. And it's the Viewsroom, the weekly podcast that answers the knottiest questions in corporate finance, business and economics. And unfortunately, I don't have Jonathan with me today. When we're doing Asian podcasts where we focus on Japan, it's quite hard to get the US, Asia and Europe into the same conversation. So it is just me, but I have Una Galani, who is Asia editor of Breaking Views, and Anthony Curry, who is based in Australia and is an associate editor. And they have both been really focusing on these deals quite a lot, know an awful lot about Japan. So I'm very excited by this conversation. So Una, Anthony, you are very welcome to the Viewsroom.
Good to be here. Sorry, Jonathan isn't committed enough to jump on this at 3 o'clock in the morning his time. But...
Indeed. Hi, Amy.
Hi, Una. So Una, as I said, you are the supremo Asian editor here at Breaking Views. So can you explain these two Japanese deals, why they have captured so much attention everywhere, I think, but very specifically, certainly at Breaking Views, I think our readers are really interested in these deals.
Yeah, Amy, I think we should take a step back here. I mean, investors have been really excited about Japan for the past couple of years, and that's spurred a really big stock market rally and record levels of deal activity. And there is a sense in Japan that all the stars are aligning for a new economic and corporate era in the country. So, Japan is exiting decades of deflation. It looks like the government's efforts to drive efficiencies in the economy, including by forcing Japan Inc. to behave in a way that is more shareholder friendly, is yielding some fruit. And Japan has been on a mission basically for the last decade to try and make its companies use its resources more efficiently and be more welcoming of takeover proposals. The late Shinzo Abe, when he was Prime Minister, he kicked off this push. And it's really important because with a shrinking population, it's the only way for the economy to grow. So the two deals that you referred to at Seven & I and Toyota Industries, they're both really interesting because they offer a verdict of sorts, really, on Japan's long-standing effort to move in this direction.
That's very interesting.
It's definitely a big question. I mean, I was at a conference a couple of months ago here where some of the big superannuation investors were asking this very question. Is this finally when Japan does what it's been talking about forever? I mean, I know I don't look it, but I'm old enough to remember that, 2002 when JC Flowers and Ripplewood bought Long-Term Credit Bank. And it was meant to be, yes, it was a troubled bank, but also it was meant to be like yet another sign that maybe, just maybe, Westerners could come in and do something. And it just kept on sort of not living up to snuff. Whereas now, maybe, just maybe, we're getting there.
So Una, can you talk us through the corporate governance changes in Japan? So what are they enticing foreign investors? We can see certainly that there is interest in M&A, But is it doing what they hoped it would? Is it working ultimately?
Yeah, that's a great question. So over the past decade, and things move slowly in Japan, so we do have to think about things over that time horizon. Japan has introduced a stewardship code. It's more recently introduced fair M&A guidelines. It's encouraging companies to weigh up takeover proposals with shareholders in mind. It sounds very basic, but, isn't in Japan. And Japan's stock exchange under its CEO, Yamaji-san, has been nudging companies to disclose plans to improve their valuations as a multiple of book value. He's basically been trying to embarrass companies that don't live up to this sort of value push initiative. And this is all fair game in Japan because so many companies are undervalued, right? So management have not focused on creating shareholder value. Companies sit on piles of cash. They're reluctant to shed underperforming businesses. They also feature a lot of something, we call them cross-shareholdings. And this is where large companies take strategic stakes in each other to fend off hostile bidders. So there's been a lot of legislation or guidelines issued over the past decade to try and encourage companies to be more open to takeover proposals. Is that value push working? I mean, Japan's targeted M&A activity could hit a 10-year high this year. Domestic M&A activity is very, very strong on the back of corporate restructuring. But if you just look at those two deals you flagged, you would reach the conclusion that it is not working.
So, Anthony, Toyota, this is, I have to say, this is a deal that is really interesting, but I have to say I'm even struggling to kind of piece it all together and try and figure out what is happening here. So can you talk me through exactly what is happening, why this is so controversial?
Oh, yes, I mean, it's the simplest deal known to humanity. I mean, come on. I mean, but look, so look, I think the problem to explain this is that for the vast majority of people,
sarcasm alert, everybody, if you didn't hear that.
I don't know what that is. I've never heard of that word. But I think for the vast majority of people outside of Japan, when they hear Toyota, they probably think Toyota Motor, and that's it. Well, the Toyota Group, which isn't a listed entity, it's an amalgam of sort of all the various entities. Toyota Group is made up of a bunch of different, I think almost 24 different companies, listed and non-listed, mostly listed. Toyota Industries, which is the subject of this buyout, this 33 billion, well, to 40 billion buyout, depending on how you count the numbers, is effectively the parent company to all the other companies. It was set up 100 years ago. Toyota Motors was spun out of it in the 1930s. It still actually provides a degree of servicing to Toyota Motors. I think it makes the RAV4 SUV, builds some engines, a few other things. I think 2% of Toyota Industries' top line still comes from Toyota Motor. But you've got a bunch of other entities as well. There's Denso, Toyota Tusho, all of which are involved in this deal as well because they all have cross-shareholdings in each other. So Toyota Motor and Toyota Industries are the largest shareholders in each other. Right? And Denso, Toyota Tusho, and a couple of others are smaller shareholders. And they also have stakes in them from Toyota Industries. So that makes this initially really difficult. But also a reason why this deal on the face of it ought to get done, because unlocking all of these cross-shareholding is what all the new rules and regulations in Japan are meant to be about. Right? So number one, lots of cross-shareholdings, massive company with all these different company structures underneath it. Toyota Motor is involved, not because it wants to buy it's its old parent, but is effectively a subsidiary because it owns 25% of Toyota Industries. It's involved, yes, because it owns 25%, but also it's effectively financing this deal. It's providing the vast majority of the $6 billion in equity that is going into this buyout. And it's doing so by effectively swapping its 25% common equity stake with voting rights for preferred stock with no voting rights. Now, what that means, and it's also giving a few funnies away that make life a bit easier for the main buyer in this, which we can get to in a minute. But it's basically allowing some of its stake not to be bought back by Toyota Industries until after the deal's done, so you don't have to raise as much money. Hence the 40 billion difference I mentioned earlier. So they're really helping out here, Toyota Motor, but they won't end up officially running the buyout. That goes to yet another Toyota company, Toyota Fudosan, which until now has been known as this sort of, I wouldn't say shadowy. It's not at all shadowy. It's just no one really talks about it. It's seen as like the Toyota family's real estate and investing company. It's unlisted. 80% of it is owned by the sub 5 of the biggest Toyota companies, including Toyota Industries, which owns, I think, 20-ish%, I'm going to say. So it really is sort of, the cross-shareholdings are still in existence in a different form after this deal is done. So Toyota Fudosan will end up basically controlling it for a very small equity stake. And the third player in this buyout, Toyota Motors funding most of it, Toyota Fudosan funding a bit, and also basically running it officially. The third player is Akio Toyoda, who's the official head of the family and also the chair of Toyota Motor. He'll end up with about a 0.5% stake in Toyota Industries, which is about 10 times what he's got at the moment, and he's reinvesting the money he's getting from selling his shares in the deal. So he's not really adding any money in, nor in fact is Toyota Fudosan. But hey, let's not get bogged down in complexities.
I mean, effectively, this is a time when activists are circling Japan, and a lot of companies that are underperforming or that look like they may have lots of sort of hidden value to unlock are coming under the attention of activists. And so if you are a large, sprawling Japanese conglomerate where the connection between all your separately listed companies relies on cross-shareholdings and a wink, wink, nod, nod, we've done business forever, haven't we, type of scenario, then this is the time and the moment that you have to preemptively defend those positions. So on the one hand, Japan under the stock exchange is pushing companies to unwind their cross-shareholdings. But if you unwind the cross-shareholdings, then what binds you together anymore, or what protects you as a company? And so effectively, Japan Inc., Toyota Motors or Toyota Group is closing rank. And they're they're doing this now because the environment around them is changing. And if they don't do it now, then they could lose control of this company.
I suppose that's why this is very interesting in a way, right? Because as you're saying, Una, if you were to do what I suppose the activists and what the Japanese government and regulators want is that these things would be unraveled or they would be made, final in some way. But that sort of unravels the way Japan has been operating, the Japan Inc. has been operating. So I think that is a really kind of fascinating element of all of this.
Yeah, it's almost as if it's like the stock exchange and others are allowing a sort of degree of transition, right, into a new entity. So, I mean, the other weird things about this. So first of all, Toyota Industries has suddenly stopped paying dividends. Right, this deal isn't closing to December, so if you're a shareholder, you don't get dividends anymore. Also, all the stakes that are being bought back off Toyota Industries, that's by the other Toyota Group companies. That isn't happening till after the deal's done either. So yes, current shareholders, independent shareholders, are getting a 23% premium to the undisturbed price when no one cared about the company and it was all about the Toyota Motor stake. But most of that money then goes to the new owners, Toyota Group, which can then use it to pay off 3/4, if they wanted, 3/4 of the $20 billion of debt they're borrowing to do this deal. So it's all done to make it much easier for Toyota Group to do this deal. And then you don't forget the shareholdings. 43% is owned by the Toyota Group in total. Add in all the sort of friendly corporations who also own stakes. You're looking at 55%, I think, owning Toyota Industries. It's going to be pretty hard to stop this deal.
Well, the other problem with this deal is that you've got Japan. Toyota Motor is Japan's largest listed company. And so if there is or should be any flag bearer of Japan's value push, it ought to be the largest listed company in the country. But Toyota Motor has actually been a bit of a holdout in this broader embrace of the shareholder value push in Japan. I mean, the company's shares have actually done well, and it's not a laggard of the index by any means, but it's sort of dragged its feet in subscribing to some of the initiatives that the Tokyo Stock Exchange has had in terms of using the sort of shareholder value, that language that the exchange wanted them to embrace. And the other thing was that the offer for Toyota Industries that was put forward was below the last closing share price. So, on the face of it as well, there was a big outcry in Japan because, hang on, this is supposed to all unlock value, and you've just put a low ball offer on the table that, as Anthony's just explained, can't really be blocked. And it's very, very complicated deal. Multiple companies, a lot of creative financing, engineering, all to just get the result that Toyota Motors wants, which is, Toyota Motors or Toyota Group wants, which is more control of the company.
Well, listen, we could talk about this all day, and I think it's definitely fascinating. But we have another deal, Una, which I'm very, very keen to chat to you about, which is we have Alimentation Couche-Tard, which, if you don't know this company, they own lots of petrol forecourts. They're a Canadian company. And they were desperate to buy the owner of 7-Eleven. Again, everyone kind of knows those convenience stores in the US. But this is actually the Japanese convenience store operator. So again, Una, this is just obviously very different to Toyota. But can you explain why the Canadian buyer, why Couche-Tard was so keen on buying this company? And then I guess we can get to exactly what happened then.
Yeah, I mean, so Couche-Tard owns the Circle K convenience stores in the US, as you said, and they were interested in buying 7&I because 7&I has a very large North American business, as a lot of Japanese companies do. 7&I has a very large footprint in the US because it bought Speedway gas stations for $20 billion in 2020. And Couche-Tard lost out on that acquisition to 7&I. So pretty much since then, they have been quietly keen on 7&I. And so Couche-Tard was willing to pay $46 billion for the Japanese company, and nearly 50% premium to the undisturbed share price. That's compelling by any measure. It had even signed a non-disclosure agreement, but Couche-Tard basically walked away this month after nearly a year-long public effort to buy this company because they said there had been no sincere or constructive engagement for the company. And they sort of published this 1,000-word letter of disapproval, just kind of complaining about how Japanese company had treated them. And it's pretty shocking because 7&I did make a bit of a show about appointing a special committee to assess the offer. But, it was an open secret in Tokyo that 7&I did not want to be bought. When people tried to claim that it would pose a national security threat to Japan if the 7-Eleven stores fell into foreign ownership, 7&I didn't do much to quash that idea at all. So, the founding, and there was also the founding family also tried to launch a buyout of the company in the midst of all of this, which failed.
The founding family of 7&I.
Yeah, exactly. The Ito clan. Yeah. And so that was obviously, that spoke volumes, really.
Yeah, they launched it and then had to pull back, but they threw out a bunch of SOPs to shareholders as well, right? So they're going to try and list the US business and raise some money that way. They got a new CEO. There's a few other things they've done, which actually some of which they talked about already, but they've been trying to do their own version of raising shareholder value. But it seems, if we believe what Couche-Tard said, and I think we probably largely do, it's pretty rare for a company to write a long screed that actually hasn't happened about something that hasn't actually happened. So, if you believe that's happened, then basically it's just been a sort of year-long waste for a very nice, easygoing Canadian company to get nowhere.
Yeah, I guess Anthony's saying it's not entirely back to square one for 7&I though, right? So they brushed off this bid, and but they have been forced to change quite a lot, right? So they've announced disposals, they've promised to return a lot of cash, they've even replaced their CEO with a foreigner. That probably would never have happened before in the old Japan Inc., but investors are now paying more attention to underperformance. So this is the upshot of that.
So we started this conversation out to sort of ask the question or answer the question about whether the changes Japan has been trying to make to M&A have actually worked. And so what I'm getting from this conversation, and you guys can tell me if I'm wrong about this, but it seems like it's baby steps, right? It's not going to be any big deal that sort of like signifies Japan has then moved on to this point where a foreign buyer can come in and just easily take it, or that you have a company that's very, very clean in terms of like what it owns and its subsidiaries, that it's very, for an activist, for example, as you said, Una, that they can see what a company owns in a very kind of like linear, obvious way.
Okay, I would
say that we're just at the very beginning of that.
Yeah, I would just argue that, and I just want to put this out there, is that I think Couche-Tard could have tried harder, right? So they could have gone hostile and taken their offer to Seven & I directly to shareholders, and that would have been the real test of Japan shareholders. Like, let's see what shareholders actually vote for. Will they vote for their own self-interest if given the opportunity directly? So Couche-Tard never formalized its offer, and I think a lot of that was wrapped up in this idea that, I mean, obviously there was some competition approvals that they would have needed in the US, and that was a complex issue. But a lot of it was also wrapped up in this idea that, cultural consensus in Japan, you don't want to scare off the management. Management is really hard. Good management is very hard to come by in Japan. There's obviously less and less people these days, so the talent pipeline reflects that. But I do think, this Japan's economy is barely growing at all, so Japan needs to do something. If Tokyo wants Japan Inc. to behave in a different way, they're going to have to turn some of these guidelines that they've issued into rules with teeth, and it's pretty much as simple as that. Tokyo has to decide what they want Japan Inc. to do and then put some teeth behind that.
Anthony, what's your take? You think we're at the very beginning of this? Is this hopeful? Are there any big lessons we can learn from this?
I go back to what these big shareholders were talking about down at this event I went to recently. Is it real or is it not? It's certainly a lot more real. There's a lot more happening, as Una pointed out earlier on. Activists were involved in the Seven & I before Couche-Tard came along. An activist is involved in a Western activist, I think, is involved in Toyota Industries. Whether they'll have much luck is another matter. I think actually Couche-Tard probably had more luck as an activist than the activist did. So it is tricky. Like I said earlier, I think that Toyota Industries deal sort of smacks of some kind of almost like a transition deal, right? So we're moving from what used to be the old ways to the new ways. But if we can just get what we can get out of this deal now, Toyota Group, before we get to the new ways, wouldn't that be great? And the stock exchange and the regulators are basically allowing them.
But that's the thing.
As saying, you need more teeth.
That's the thing. There is enough activity to be confident things are moving in the right direction. But Japan isn't a country with a lot of time. I mean, the economy is barely growing, population is shrinking, and they've had decades of deflation, so they don't have time to waste. And so the problem is that today the guidelines are strong enough to force companies to change. Couche-Tard has forced Seven & I to change itself, but still weak enough to allow management to act in their self-interest rather than shareholders' interest. And that's the thing that needs to change. And it's these large, iconic deals that set the tone for everything else.
Amazing. Very good. Interesting. Thank you, Anthony. Thank you, Una. Really, really love that. Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and reuters.com.